Have you ever wondered what happens if you just don't pay your due taxes to HMRC? It's a bold move, admittedly, and most people think they don't actually have a choice in the matter. Whilst HMRC can seem like the UK's most persistent ex, there are people, real people from my 20 plus years working as an accountant who have managed to avoid the most persevering advances. So, want to know what happens to you when you ghost the taxman? Well, I know someone who not only ghosted HMRC but broke up with them over text too. Now, that someone I mentioned earlier, let's call him Tim for the purpose of this video, found himself in that exact position. He fell into one of the many accounting pitfalls. He didn't think he earned enough money to let anyone know. Then the business got busy and he kept meaning to do it, but he didn't get round to it. I mean, what's 10,000 through your limited company, right? Turns out, enough to warrant a knock on the door from HMRC. For Tim, he's a director of a limited company, so he falls victim to two types of taxes already: corporation tax on company profits and personal tax on any money he takes from the business for himself. For a self-assessment tax return, if you miss the 31st of January deadline, it's an instant £100 fixed penalty, even if you owe nothing. But if you leave it another 3 months, that's a £10 per day fine, up to £900. 6 months is a further £300, or 5% of the tax due, whichever's higher. And same again at 12 months. That's a whopping £1,600 in penalties. And it's before interest or tax for you personally. For a company, if your tax return is late, it's a £100 penalty up to 3 months late. Then another £100 if still not filed after 3 months. If you're late 3 times in a row, each 100 becomes 500. Company's house is even higher, by the way, at 3,000 per year. After 6 months, HMRC estimates your tax. It's called a determination. That is, they are determined you owe them a bucket load of cash and you can't appeal it unless you file a return. If you leave it 12 months, add another 10% surcharge of unpaid tax. Let's take a look at Tim after all those penalties, 12 months later, and he found himself owing almost $2,000 just in penalties alone to HMRC and a further $1,500 to company's house. He hadn't traded much. His words, not mine. So he didn't have the money to pay. So he did what a lot of self-respecting flightless birds do, and he stuck his head in the sand. So that's HMRC 3,500, Tim nil. Now, filing is one thing, but not paying is another. And Tim has decided that he's not particularly fond of either. For any unpaid tax, self-assessment, corporation tax, VAT, payroll, HMRC charges interest, which is currently 7.75%, and it compounds daily, so it's growing. They also charge surcharges, which 30 days late is 5% of the tax due, 6 months late, another 5%, 12 months late, another 5%. So that's 15% extra just for leaving HMRC on red. For Tim, maybe ghosting HMRC wasn't the best solution, but scroll forward another 6 months and Tim's HMRC-shaped problem just got a whole lot bigger. The score is now HMRC 3,640 and Tim a big fat 0. Now, let's talk about the big penalties for VAT-registered businesses and employers. Despite Tim not trading much, he sure did earn enough to become VAT registered when he bought himself a new van and became an employer as well with an apprentice on top of that, because his business was getting busier, but he still didn't get around to his paperwork. So here's the deal. Since January 2023, HMRC introduced a shiny new VAT penalty point system. In Tim's world, since he doesn't care much for HMRC, we're going to think of this kind of like driving. Every time you miss a deadline, boom, that's another point on your license. Rack up enough points and HMRC are removing your tyres and your steering and keeping you from being on the road. Metaphorically, of course. But here's how it works. If you submit your VAT returns on an annual basis, you've got a penalty threshold of 2 points. That's the most you can receive before things start to get very serious. For quarterly submissions, it's a threshold of 4 points, and for monthly, it's 5. And once you hit that threshold, every late return after that triggers a £200 penalty every single time. And these points don't go away overnight. To get rid of them, you have to firstly submit all of your returns on time for a compliance period, which is usually around 12 months for quarterly returns. You need to submit all your outstanding returns, and you need to stay squeaky clean for the whole period. If you're late paying your VAT bill, HMRC also can still charge late payment penalties and interest, totally separate from the point system. Now here's how the late payment penalties work. If you pay up to 15 days late, there's no penalty, but interest is still charged on it. 16 to 30 days late, 2% of the amount due is charged. More than 31 days late, there's another 2% plus daily interest at 7.75%. Now, if you're registered as an employer with HMRC and you miss any PAYE, NIC payments for your employees, you're also at risk of some very nasty fines there. Late payments, for example, penalties are starting at 1% of the amount due, going up to 4% depending on your frequency. And if you've still not paid after 30 days, they can charge interest, they can issue determinations, and they can even estimate what they think you owe. And as you can probably guess, it's very rarely in your favour. So Tim is not just looking at a bill anymore, but rather a ransom note written in blood. A bit much? Okay, we've hit the point where Tim has ignored all these letters. He hasn't paid, he hasn't filed, he hasn't even opened the envelopes. In fact, anything with HMRC logo on it is currently sealed in concrete and about 12,000 feet deep in the ocean. Well, what now? Enter the HMRC Escalator of Doom, which might actually be trademarked by them. First off, phone calls and warning letters. No, hi, how are you? HMRC are not in the mood for small talk anymore. Then debt collectors chasing Tim's unpaid bills. Then we come to county court judgments, CCJs, against you or your company. Then we've got direct recovery of debt. HMRC can dip directly into your bank account. So if you suddenly go into your overdraft and you weren't expecting it, you know why. And then we've got bailiffs, and they can turn up and seize assets, computers, vehicles, stock, even personal items if you're personally liable. Think self-employed. And yes, I'm talking about the kind of bailiffs you see on Can't Pay, We'll Take It Away. Have you watched that? And last but certainly not least, freezing your bank accounts or applying charging orders on your property. This is all legal and they don't need your permission. They just can. And the scores on the doors? HMRC, 4,720 due. Tim, well, he did have a reclaim, but HMRC have held on to it because of the amounts that are outstanding. Sad times. If you're running a limited company like Tim and think you're safe behind the corporate veil, think again. HMRC, if they believe you acted irresponsibly, doing things such as withholding VAT or PAYE due and spending it, trading whilst insolvent, they can pursue you personally under something called director's liability, and especially for VAT and PAYE. They can also disqualify you as a director for up to 15 years, make you personally repay company debts, even prosecute you under the Company Directors Disqualification Act. Spare pants for Tim, anyone? Now, I know I mentioned prosecution earlier, but let's clear this up. Most tax errors are not criminal. I can't speak on all the other stuff Tim's been up to, but certainly for this, he's not going to end up in Alcatraz just yet. But if you're falsifying records, not registering for VAT when you should, creating false invoices, using offshore accounts to hide money or income, That's tax evasion. HMRC has its own criminal investigations team and they prosecute 600 plus people a year, and they're looking to expand that. If you find guilty, you're looking at unlimited fines, asset confiscation and prison sentences of up to 7 years. This isn't about forgetting to file your return just once. It's about deliberate concealment, and they don't mess about. Now, if this video has you sweating buckets, good news. You can still fix things. Yes, even Tim has time to make this all right, and it doesn't involve fleeing the country. You can do it through things like time to pay, TTP. You can set up a payment plan over 6 to 12 months, sometimes more if HMRC are feeling generous. There's also voluntary disclosure. If you know you've made a mistake, own up to it. Coming forward gets you reduced penalties. Then there are appeals. You can challenge some penalties if you've got a valid excuse. Deaths, illness, tech failures. Not my dog ate my tax return. And yes, I genuinely have heard that. Also, get advice. Tax experts like us can help reduce penalties, negotiate with HMRC, and just generally help you get on top of things before they escalate. You can find a link below to book a call with us if you're really struggling. The good news is we helped him get sorted in the end, and although he's approximately £5,000 poorer over the next 2 years, eventually he'll have enough left to cover therapy and his grey hairs. Plus, he has reminders and a plan in place to not fall foul of HMRC again. So if you're falling behind or you've already missed a deadline, the sooner you act, the better the outcome. Don't be a Tim, get on top of it.